Okay, alrighty. So I'm taking a look at GBPAUD. You can see I'm already in this trade. I was in this trade a little bit earlier and I got stopped out. I had my stop loss placed at break even. But this is something you can do without any indicators, even support and resistance, but it is done with supply and demand zones, looking for accurate and sniper entries. So you see clearly that we're on an uptrend. We see that this is our peak formation high here because we have not made another higher high, although we've broken this level of structure here, which is a major support structure, and we've created a lower low. As we can see, it's broken, but it has come back up into it. So it could be this whole area here could be a false breakout. But let's just see why I took this trade where I did. Let's remove this right here. So when we have an uptrend and we have not created, and we have created a higher high and we've broken structure, of course we see that this is pretty much a range. So what I did was using just Fibonacci from the highest point to its lowest point. I wanted to see where the retracement was. And let's just clear this out. This was at a 786, as you can see clearly. Okay, so we have a retracement at the 786. So if we come down all the way to this level of support here and break this level of support, I'm looking for a take profit. And this is where I'll use my Fibonacci expansion. I do usually have my Fibonacci expansion on my Fibonacci tool, so I can do it in one swoop. But if I want to leave my fibs on my chart, I try to make it look as clean as possible. It's very important, at least to me, that the charts are clean. So I'm looking for a take profit area. And so I'm going to just take the Fibonacci expansion from the 786 to the 0 back to the 786. Okay, there we go. Here. And 127 and the 618 would be my targets. Probably would take it to the 127 just to be safe and secure. 786 is a deeper retracement. So if we break this level of support here, the 127 will be my target. Right now I don't have it set. I'm just going to wait and see. Today is Friday, so we still can continue this uptrend. It's very possible. If you want to place a trend line and you want to wait for it to be broken to confirm that we are continuing this downtrend, that's what that would look like. And so this is just a simple way of keeping your charts clean. Again, you find your peak formation high, you find its lowest point, and then you just draw from high to low. We see where the retracement is, and you could have actually done it here. You would have got a retracement and you would have came down here. Let's just see what that would look like. Let's just take off this one right here. Okay. So from high to the first original low, what do we have here? I don't know when I'm doing videos, it seems like my mouse gets slow. So look, we have a 786. Let me just make this a little bit bigger so you can see where the entry would be. Let me take off the zone. So we have a 786. We have a rejection here and a nice rejection from this bullish. So this would be a nice little entry. You could have taken it down. Let's see how many pips this would have been. Let me see if your entry's here. Let's say you take it down to 0. It's like 172 pips. Yeah, about 172 pips. It's not bad. It's not bad at all. Not bad at all, to be honest with you. And then if you wanted to just use your Fibonacci retracement and just follow and go with the flow of the actual market, again, you place it from high to low. We're at another 786, but it made a higher high because it's higher than this low here. So what you can do is use the market for your take profit. You can use this as a take profit 1 here, and you can use this as a take profit 2. So your take profit 1 would have different here. Actually, you could use this area over here as a take profit 1, and this would have been your take profit 2. This would have been your take profit 3. So you would have at least banked, if you had to add a take profit 2, you would have entered right here. Yeah, take profit 2 would have got you 74 pips. So some people wonder, do you have to wait for the candle to close to enter? The answer is no. You see here you have 2 wicks, pretty much like tweezer tops, because the wicks are pretty much the same size. They don't really have to be the same size. I don't look for them to be the same size. I don't look for the candles to be any particular size at all. I look for these 2 wicks alone to look like they're twins, so to speak. And then of course you have a bearish engulfing, and you could have taken this all the way down. If you want to catch a sniper entry, once you start seeing rejection, so you have the 786, you have rejection, then you have a bullish candle again. It broke the 786, but then you keep on seeing wicks to the top. It would have been a very aggressive trade to take. You could have entered, put your stop loss, I would say, in the middle of a little bit past the 886. Let me see if I just put the 886 on my chart. You see, it was really trying to hit the 886, but just receiving rejection. So if you wanted to just try to catch it at the wick top, you could have placed a sell as pretty much once this candle, when it went up, I would have placed a sell. Or you could have put a buy stop, a sell stop, I'm sorry, a sell stop at the 786, since we see a lot of rejections. And then you could have just wrote it down. So there's a lot of different ways you could have taken this trade. You could have went down to the 15 minutes as well and caught it right here, which is what we see, a nice M pattern. And you also see these 2 twin wicks, as you can see. Again, like I said, it doesn't make a difference what the candles look like, but the wick rejections is what I'm looking for. Let me make this just a little bit bigger. So you have 1 wick rejection. Look for at least 3. You can find 3 wick rejections at a key level of support or resistance. You would be nice. You'd be able to take the trade right here when this candle closed, because you would have had 1, 2, 3. You would have had really 4, but up here, really trying to reach for this 886. You would have had a very nice entry. In fact, it would have been a nice wick entry, and you would have caught this whole move down. Otherwise, if you had waited for this confirmation candle to close, you would have caught it at the 786. So let's go back to the 1 hour and see where we are. Okay, so we made a higher low, and then we came back up into this level of resistance, a nice supply zone. And so again, the best way I do is just take from the highest point to the lowest point, because we see we didn't get a nice drop, but we still are creating lower highs. And even though that this is a higher high, it has not broken this previous lower high, and that's why I had my zone drawn right here. And as you can see, we came back up into it. And let's just take this off for 1 second. And what do we see again? 2 nice twins, I call them. We have the twins showing up, and we have a bearish engulfing, which is giving us a signal that the sellers have entered the market. So it's from this standpoint of the peak formation high and creating lower highs, it's indicating to me that most likely this trend could be changing. We could be going into a downtrend. But in order for that to really happen, what we're going to need to happen is to have this level of support broken right here. So until we break that level of support, for me, it won't be a downtrend. So this would be my apex for the M formation. So my M would look like this. Let's just take this low here. Okay. And then coming down. Now, from a harmonic perspective, I don't want to get into too many different methods, but to see if there could be a harmonic. One thing about TradingView, you don't get it right, it does its own thing. So let's see if I can find a harmonic here. Let's take this off as well. Come on, let's get you back to where you need to be. I don't even see my reset button on this thing. Okay. If I wanted to see if there's any harmonic, I draw from, let's say, this relative low, this relative high. This would be a 618. I don't want to get too encumbersome with this. I do have a lot of different methods that I know how to trade for confirmation for trades. So this is a 618. Let me just put the 786 back on as well, because let's see where we are. Okay, so we kind of came close to the 786. I would use the 786. So if this would be I have a little chart here as well for my harmonics. So looking at this, this would be, if your B is a 786, looking at a butterfly, so your D point would be a 127. It's always nice to have a nice chart, whatever patterns that you're trading, whatever methods that you're trading or system you're using. If you can have a chart that you can always pull up just for your confirmation of your trade plan or what you're looking for as far as confirmation, that's always good to do. I'm not sure if you can even see this, because let's bring this back up here. I don't even know if you saw that because of what I'm sharing here. All right, so it could be a 786. And then if you do an ABA, you're going to see where take profits, where the D would be. A, B, A. Look at that. Right there, 127. So from a harmonic perspective, 1.80552 would be the target. But let's just keep it simple. There's showing different ways of which you can trade the market using different systems. But let's just stick to something that's really nice and simple. From the previous high to the low, we have a 786, and take it from the high. No, wrong tool, wrong tool, wrong tool. Delete this. It's an expansion tool that I need. Back into the alternate method. So you're going to go from high to low, back into the high. It's going to give you the 127, which is pretty much exactly where the harmonic pattern D point would be. So it's a nice pair of nice confluence. So that's what I'm waiting for. This is what your chart would look like. You sit back and wait. You want to make sure that you come into an area of confluence, using Fibonacci as well for an extra level of confluence, because we don't have your support and resistance drawn out. So your Fibonacci retracements would be, in fact, your levels of support and resistance. So we know that 786 here is an excellent reversal zone. And then we have confluence with the twins that have showed up. They've showed up twice. Actually, we have a bearish engulfing candle here, which is confirmation as well. And so what we're waiting for, we're going to wait for a break of this trend line and retest and see what happens. It's probably going to come all the way down. Again, if we break this major level of support here, we're going to look for a target of the 127 or the 1618. So this is a trade that most likely I will be holding over the weekend just to see what we do. Now we may come back up into this area and form either some type of market pattern, which would be a double top. We could form head and shoulders. We could form a triple top. So let's just see. We could play around in this area as well, come back up and just form a lower high. So there'll be a break in market structure. So there's a couple of things that could happen. We've got some nice pips as well, as you can see. And that's it. Trying to keep it nice and sweet. If you have any questions, concerns, please feel free to comment. Please don't forget to subscribe. Hit the notification buttons as I post up my charts. And just for the record, I am not a professional trader or financial advisor. I'm not advising anyone to use their money in any kind of way. But each to his own, we're all responsible for our finances, right? So do what you must. Until next time, I'll talk to you later.